EU leaders are meeting in Brussels to approve a common set of rules for managing the closure of failing Eurozone banks in an orderly way. Under a plan agreed by finance ministers, a €55 billion, $75 billion, £46 billion fund will be set up, financed by the banking industry, over 10 years. The deal is aimed at building an EU banking union that should minimize the need for taxpayer-funded bailouts. It could be the biggest centralization of EU power since the Euro's launch. A new European resolution authority will be created, to decide when and how insolvent banks are to be closed. The UK and 10 other non-eurozone economies are not part of the deal. A resolution fund paid for by the banks themselves would gradually merge national pots into a common European fund. The idea, says the BBC's business editor Robert Peston, is to minimize the collateral damage from bank failures. But he says the fact that Eurozone finance ministers have retained the powers to decide the fate of failing banks does not augur well for speedy action, and the 10-year lead time will not reassure creditors of Spain and Italy, for example, that they will not end up liable. Moreover, €55 billion is tiny compared with the balance sheets of Eurozone banks, our editor says. EU leaders are keen to finalize a deal before new bank stress tests begin next year. The European Central Bank, ECB, has been put in charge of Eurozone bank supervision. The stress tests are expected to reveal that some banks are overexposed and will require new injections of capital. Tighter defense cooperation is also on the agenda. The European Commission sees scope for savings, highlighting that there is too much duplication in Europe's armed forces. Defense industries employ about 750,000 people in the EU. The first pillar of banking union will be the ECB's new supervisory body to monitor all 6,000 banks in the Eurozone. Germany and some other countries want to retain their own high degree of supervision over smaller banks, which are reckoned to pose less systemic risk. The second part is the single resolution mechanism, to bail out or shut down problem banks in the Eurozone. The final pillar is a common deposit guarantee, setting an EU-wide deposit guarantee of €100,000, £84,000, $138,000, maximum per saver. There will be a common rule-book governing bank accounts across the EU. At the summit, UK Prime Minister David Cameron is expected to raise the issue of migrant workers again. France has seen heated debate about the rules for posted workers, that is, temporary workers brought in from another EU state. The lifting of labour market restrictions for Bulgaria and Romania next month has made the issue more acute, because of fears in some areas about social dumping, that is, cheap foreign workers replacing locals.